The Book Essence Podcast. Ep.1. The Bitcoin Standard.
Have you ever thought about, why money actually works? We use it every day, but, it's kind of this weird thing when you actually stop and think about it.
Yeah, it's like we take it for granted.
Totally. So in this deep dive, we're cracking open the Bitcoin standard to figure that out.
It's a fascinating book.
And we're not just talking Bitcoin here, right? This is about the whole history of money, how societies have always chosen what they value.
Exactly. From the most basic barter systems to, the digital age.
Which is crazy to think about, right? We're going from giant stone discs to digital coins. What a ride.
Well, and that's what's so cool about this book. It shows how there's this pattern throughout history.
Oh.
Yeah, societies always seem to pick the hardest thing to produce as their money. It's like there's this instinct to go for whatever's most scarce and reliable.
That's interesting. Okay, so before we get all Raiders of the Lost Ark on those stone discs, let's back up for a sec.
Sure.
What does money do? What are its core functions?
The Bitcoin standard lays this out really clearly. Money has three main jobs. It's a medium of exchange, meaning we use it to buy and sell stuff.
Right, makes sense.
It's a store of value, meaning we can save it for the future. And it's a unit of account, meaning we use it to measure and compare the value of things.
Okay, I've definitely heard those terms before, but to be honest, they always sounded kind of jargony to me.
I get that, but they're describing things you do every single day, without even thinking about it. When you buy groceries, when you check your bank balance, when you decide whether to save for a vacation, that's all these functions of money at work.
Huh, you're right. It's like the air we breathe. Essential but invisible until it's gone.
Exactly.
Okay, now the book talks about this idea of hard money versus easy money, and it seems like that's key to understanding this whole story. Can you break that down for me?
Absolutely. Hard money is something that's difficult to create, limited in supply. Think gold, for example. Easy money is, easier to produce, often by governments. And as you might guess, it's prone to losing its value because of inflation.
Inflation. The silent wealth killer.
Okay, so now I think we're ready for those Indiana Jones artifacts. The book gets some seriously wild examples of things people have used as money, like those massive stone discs on the island of Yap. Were those actually money?
Yep. The raised stones are a perfect example of how, even without fancy technology, societies figure out how to create reliable money.
But seriously, those things were huge, some weighed tons. How did they even use them? Did they drag a stone to the market every time they wanted to buy something? Actually, no. That's the fascinating part. The stones often stayed put. Ownership was transferred through this shared understanding within the community. Think of it like a public ledger. Everyone knew who owned which stone, even though the stone itself didn't move. It was like,
early blockchain.
You got it.
I love that ancient fintech. But didn't some guy try to game the system? The book mentioned something about that?
Yes. David O'Keefe. He was a sailor who realized he could use modern tools to produce more raised stones. Basically, he was trying to turn hard money into easy money.
And I'm guessing that didn't end well.
Not at all. By flooding the island with new stones, he totally messed up the balance. The raised stones lost their value, and it threw the Yap economy into chaos.
That's kind of a perfect illustration of why scarcity is so important for money. If anyone can just create more of it, it loses its value.
Exactly. And that's not just an ancient history thing. The book gives other examples like agri-beads in Africa, highly valued until Europeans started mass producing them.
And seashells too, right? I remember reading about that.
Yep, same story. Easy to produce equals value goes down the drain. It's a recurring theme throughout history. Which makes you wonder, what are we doing with our own monetary system today?
Ooh, good point. But before we spiral into existential dread about modern finance, we got to talk about gold. I mean, it was the money for centuries. Why? What made it so special?
It had this unique combination of things going for it. Durability, it doesn't corrode or decay. Divisibility, you can split it into smaller units. Portability, relatively easy to transport.
Right, makes sense.
But most importantly, its supply is limited. New gold is scarce compared to how much already exists, so it has a high stock-to-flow ratio.
Which means?
It's natural deflationary. You can't just print more gold like you can with paper money.
I'm starting to see why gold was king for so long. But the Bitcoin standard doesn't just tell us what gold is, it gives us these really compelling historical examples. Right?
Yes, like the rise and fall of the Roman Empire. When Rome was strong, their money was backed by gold and silver. Solid economic foundation. But then, as the empire grew, emperors started messing with the currency.
Oh no, what did they do?
They started debasing the coins, adding base metals to stretch the supply.
Like trying to make a pizza dough bigger by just making it thinner. It might look like more, but it's just less satisfying.
Perfect analogy. And yeah, that didn't end well for Rome. Debasement led to inflation, their currency lost value, and it contributed to the whole empire crumbling.
That's a pretty sobering reminder about the dangers of messing with the money supply.
It is, and it's a lesson that's just as relevant today as it was back then.
It's amazing how history seems to repeat itself, isn't it? But hold on, if gold was working so well for so long, why did we move away from it? That seems like a pretty big deal.
That's the EE question. And to answer it, we need to talk about how government money came to be. That's a whole chapter of monetary history full of, let's say, interesting choices.
Okay, lead the way. How did we go from the relative stability of gold to the roller coaster ride of government-issued fiat money?
Well, there were a few key moments that shifted things. In the early 20th century, central banks emerged, and governments started moving away from gold-backed currencies.
So they wanted more control over the system.
That's one way to put it. They wanted more flexibility, more power to influence the economy. And of course, there were trade-offs. Think about what happened between World War I and World War II. Countries went off the gold standard to finance their war debts, and what happened? Massive inflation and instability.
And then the Great Depression. Right.
Exactly. Things got really bad. The world was desperate for a solution, which led to the Bretton Woods Agreement in 1944. This was an attempt to stabilize things by pegging other currencies to the US dollar, which at the time was still backed by gold.
So it was kind of like a gold standard 2.0.
Yeah, you could say that. It worked for a while, but it ultimately wasn't sustainable.
What happened?
By 1971, the U.S. completely ditched the gold standard.
Wow, that's huge.
As a total departure. From that point on, all major currencies became what we call fiat money. Their value isn't based on any asset, just on government decree.
And that's pretty much where we are today. But the Bitcoin standard argues that this shift has had some, shall we say, unintended consequences. Like what?
Well, look around. Persistent inflation eating away at your savings, government debt spiraling out of control, the economy going through these crazy boom and bust cycles. The book links all of this back to moving away from sound money.
So it's like we traded stability for, what, the illusion of control? And now we're paying the price.
That's a pretty good summary. But to really understand this connection, we need to talk about something called time preference, which the Bitcoin standard spends a good chunk of time on.
Okay, what's time preference? Is this like how much I procrastinate?
Not quite, though maybe there's a connection there, huh? Time preference is about how much we value immediate gratification versus planning for the future. And the crazy thing is, the type of money we use can actually influence that.
Wait, are you saying money itself can change how we think about the future?
That's exactly what the book argues. Think about it with sound money, like gold, which holds its value over time. You're incentivized to think long-term, save, invest, build for the future. It's like a solid foundation.
Makes sense. But with fiat money, that's constantly losing value.
You're more likely to spend it now before it's worth less. Why save when your money's evaporating? Better to buy those shoes you don't need today. That's high time preference in action.
So it's like unsound money pushes us toward this live for today mentality.
Yeah. And the book connects that to, like, the difference between societies that build for the long-term cathedrals, scientific discoveries, lasting institutions.
Versus those that are just chasing quick profits.
Exactly. Sound money correlates with planning for the future. Unsound money, short-termism, speculation, and instability. It's a pretty profound idea.
It really is. Okay, so we've got this connection between the money we use and our ability to plan for the future. But there's another piece to this puzzle, right? How money actually directs resources in an economy.
Right. In a free market, prices are like signals. They tell businesses what to make, consumers what to buy. But the Bitcoin standard points out a huge GE problem.
Which is?
When governments manipulate the money supply, those price signals get distorted. And that leads to all sorts of unintended consequences.
Okay, example time.
Imagine you're a business owner and you see housing prices skyrocketing. You think, boom, time to build more houses.
Seems logical.
But what you don't know is that those rising prices are artificial. They're being inflated by easy credit from the central bank. You're making decisions based on bad information.
Oh no, so it's like building a house on a foundation of sand.
Exactly. This leads to what economists call a misallocation of capital. Resources get poured into projects that wouldn't make sense under normal market conditions. And then, when the easy credit dries up, The whole thing comes crashing down.
This is starting to sound eerily familiar, like 2008 familiar.
That's no coincidence. This is the Austrian business cycle theory in action. Those boom and bust cycles we keep seeing. They're often driven by central banks trying to smooth things out, but actually causing the very problems they're trying to prevent.
So the takeaway here is that messing with the money supply, even with good intentions, can backfire spectacularly.
Yep. By distorting those price signals, central banks create an environment ripe for bubbles, busts, and economic uncertainty.
It's mind-blowing how the type of money we use has such a huge impact, not just on our wallets, but on the whole economy.
And it goes even deeper than that. The Bitcoin Standard argues that sound money isn't just about economics, it's about individual freedom.
Whoa, okay, now we're getting philosophical. Is money really about more than just, numbers in a bank account?
The book makes a powerful case that it is. Sound money limits government power by restricting their ability to just print their way out of problems.
Because in the past, they had to actually tax people or borrow money to fund stuff.
Right, which put a natural check on their power. But with fiat money,
They can just create more whenever they want.
which can be really dangerous. And this isn't just theory. Throughout history, unsound money has gone hand in hand with war and tyranny.
Give me an example.
Think about the hyperinflation that destroyed Weimar Germany after World War I. The government printed money like crazy to pay off war debts. The German mark became worthless, and it created the conditions for Hitler's rise to power.
That's a chilling example of how economic instability can have devastating political consequences.
It's a cautionary tale. And the book argues it's not unique to Germany. Unsound money empowers governments to spend recklessly, to wage wars without public support, to erode individual liberty.
So this isn't just about my bank account. It's about the very foundations of a free society.
Exactly. And there's another sneaky aspect to this whole thing that the book calls the bezel.
The bezel. What's that?
It's a term for this hidden transfer of wealth that happens through inflation. It's like a stealthy tax that steals from savers and benefits those in power.
Okay, so it's like picking our pockets without us even realizing it.
Pretty much. And it all comes down to the government's ability to manipulate the money supply.
Okay, so we've established that government-controlled money has some serious downsides, both economically and politically. But if we want to get off this crazy train, what are our options? This is where Bitcoin enters the picture, right?
You got it. The Bitcoin Standard presents Bitcoin as a potential solution to many of these problems.
Okay, so let's get down to basics. What is Bitcoin?
At its core, it's a decentralized, peer-to-peer digital currency. It's created in 2008 by this mysterious figure, or maybe group of people, using the pseudonym Satoshi Nakamoto. And it's unlike anything we've seen before.
When you say decentralized, you mean it's not controlled by any government or central bank. Is that even possible?
That's exactly what makes Bitcoin so revolutionary. It operates on a global network of computers, not within any institution. Transactions happen directly between users, no intermediaries.
This is sounding more and more like science fiction, but there are like a zillion other cryptocurrencies out there now. What makes Bitcoin so special?
Bitcoin has a unique set of features that set it apart. First and foremost, it has a fixed supply of 21 million coins.
Ah, built-in scarcity, just like gold.
Exactly. No one can just decide to create more Bitcoin. And unlike gold, the issuance of new Bitcoin is totally predictable. It follows a set schedule. No surprises.
Okay, that's pretty clever. But this whole decentralization thing, how does that actually work in practice?
Imagine a giant digital accounting book, tamper-proof, that's shared across a massive network of computers all over the world. That's the blockchain, the technology that underpins Bitcoin. Every transaction is verified and recorded on this blockchain, making it incredibly hard to manipulate or censor.
So no single entity can control it. That's mind-boggling.
And because it's distributed across so many computers, there's no single point of failure. It's incredibly resilient. It's like
Bitcoin took all the best qualities of gold, like scarcity and durability, and combined them with the power of digital tech.
That's a great way to put it. That's why you hear people calling it digital gold. It's got the same monetary properties, but with added benefits, like easier transfer and divisibility.
Okay, this is making a lot more sense now. But I gotta ask, Bitcoin is still pretty new, and there are concerns about it, right? Like, what about the energy consumption? I hear Bitcoin mining uses a ton of electricity.
That's true. It does require significant energy. But that's a trade-off for its security and decentralization. We're talking about creating a truly tamper-proof, censorship-resistant money system that takes a robust infrastructure.
So it's the price we pay for a more secure and independent financial system.
Exactly. And it's constantly improving. Miners are using more renewable energy, and the technology is becoming more efficient all the time.
Good to know. What about the price swings? Bitcoin's price seems to go up and down like crazy,
The volatility is likely a growing pain, something we see with a lot of new technologies.
like the early days of the internet.
Precisely.
Hmm.
Remember how crazy those tech stocks were back then? But as the internet matured, things stabilized. Same thing could happen with Bitcoin as more people use it and understand it.
So you're saying those wild price swings might smooth out over time?
That's the idea. Volatility is often a characteristic of early adoption.
Makes sense. Okay, one last challenge. Scalability. Can Bitcoin really handle all the transactions if it becomes, a globally used currency?
That's a valid concern. The Bitcoin blockchain can only handle so many transactions per second. But there are solutions in development, like the Lightning Network.
What's that?
It's a second-layer technology that sits on top of the Bitcoin blockchain. It lets people make faster and cheaper transactions off the main chain, kind of like creating an express lane.
Ah, so it takes some of the pressure off the main network.
Exactly. And there are other similar technologies in the works to make Bitcoin more scalable and practical for everyday use.
This is all so fascinating. But what about those other cryptocurrencies? Are any of them a contender to become like the digital money of the future?
The Bitcoin standard makes a strong case that most of those altcoins, as they're called, are missing key ingredients. They just don't have that same level of decentralization and scarcity.
So they might be interesting tech, but not really sound money.
That's the argument. A lot of them are controlled by small groups or companies, which makes them vulnerable to manipulation. And most don't have a fixed supply, so they can be inflated, just like fiat currency.
So Bitcoin really is in a league of its own.
It seems that way. The Bitcoin standard makes a very compelling argument that Bitcoin is the most likely candidate to become the dominant form of digital money in the long run, at least for now.
Okay, wow, we've covered so much ground already. From the very beginning of money to this potential revolution happening right now. Before we get too deep in the weeds, let's recap what we've learned from the Bitcoin standard so far. What are the big takeaways?
So we started with this journey through the history of money, from those crazy primitive forms to the rise and fall of gold. We saw how governments abandoned the gold standard for fiat currency, which, as we've discussed, has brought us persistent inflation, economic instability, and some argue a loss of freedom.
Yeah, not great.
And then we met Bitcoin, this potential solution to a lot of these problems. It's decentralized, scarce, secure by design. And even though it's still early days, there are innovative solutions being developed to address the challenges it faces.
Like that Lightning Network thing, right?
Exactly. The Bitcoin standard is really pointing to a potential paradigm shift. It's asking us to rethink money, and by extension, to rethink how our entire society operates.
This is definitely giving me a lot to think about. I have a feeling this is just the tip of the iceberg, though. What else does the Bitcoin standard explore?
Well, the book goes even further. It dives into how Bitcoin could impact the whole world. Everything from disrupting traditional finance to what a truly decentralized monetary system would mean for us philosophically.
Okay, I am officially hooked. We'll have to unpack all of that in part 2 of our deep dive. Stay tuned, everyone. Things are about to get even more interesting. Okay, so we're back, and my brain is still buzzing from all that stuff about Bitcoin's potential.
Right. It's a lot to take in.
It is. Last time, we ended on this cliffhanger about Bitcoin maybe becoming a global reserve currency.
Yeah, imagine that.
I'm trying to,
Yeah.
but I need help. What would that even look like?
So picture this, central banks around the world, instead of holding mostly US dollars or euros, they start adding Bitcoin to their reserves.
Oh,
It sounds wild, right? But think about it. Bitcoin's fixed supply makes this amazing hedge against inflation. And with governments everywhere printing money like crazy, it's no wonder people are looking for alternatives.
that's true. Holding Bitcoin would probably feel a lot safer than holding on to a currency that can be devalued overnight.
Exactly. And if this shift actually happened, it would totally disrupt the global power balance. The US dollar has been the top dog for so long, but Bitcoin could change all that.
We could be heading toward a world with multiple major currencies, all competing with each other.
Right. It would totally reshape global trade and geopolitics. We're talking massive shifts.
Okay, that's a whole other can of worms. We might have to open another time. But let's zoom in a bit. How would this Bitcoin revolution impact regular people like you and me?
Well, one of the biggest potential benefits is financial inclusion. Right now, billions of people around the world are excluded from traditional banking.
They can't get loans, can't save securely.
Right. But with Bitcoin, all you need is a smartphone and internet access to join the global economy.
It's like bypassing all those gatekeepers of the old financial system.
Exactly. Let's say you're a small business owner in a developing country. You need a loan, but traditional banks won't touch you. With Bitcoin, you could access a decentralized lending platform and get funding from people anywhere in the world.
That's amazing. It's like democratizing finance, giving everyone a chance to participate.
That's the potential, empowering individuals who've been shut out by the current system.
Okay, I'm really starting to see how this could change things. But what about those of us who are already plugged into the traditional financial system? How would a Bitcoin-based economy affect us?
Well, think about the businesses you interact with every day. We're already seeing more and more of them accepting Bitcoin as payment.
Yeah, I've noticed some local coffee shops and stuff starting to do that.
It's happening everywhere. And it's not just small businesses. Major companies like Microsoft, Expedia, AT&T, they're all accepting Bitcoin now.
Wow, so it's really going mainstream.
It is. And as more people use Bitcoin, more businesses will have to adapt. It's just a matter of meeting customer demand.
Makes sense. But it's not just about spending Bitcoin directly, right? I keep hearing about this whole new ecosystem being built around it.
Right. Think about all the things we do with traditional finance lending, borrowing, investing, even things like prediction markets. All of that is being reimagined and rebuilt on the Bitcoin blockchain.
So we're talking of a whole parallel financial system running on different rules.
Exactly. One that's more transparent, more efficient, and less reliant on those centralized institutions we've always relied on. It's pretty exciting.
It is. But I have to ask, the Bitcoin standard paints a pretty optimistic picture. What about the potential downsides? We can't ignore those.
Of course not. We talked about scalability before, but there are other challenges too, like regulation. Governments aren't exactly known for embracing disruptive technologies, especially when they threaten their power.
Yeah, true. How governments choose to regulate Bitcoin could make or break it.
Definitely. Some countries are taking a wait-and-see approach, others are trying to control it tightly, and a few have even banned it outright.
It's a mixed bag for sure.
And this situation is changing constantly, so it's hard to predict how things will shake out.
Okay, so regulation is one big question mark. What else should we be thinking about?
Education. Right now, most people still don't understand Bitcoin. And that lack of understanding can lead to fear and skepticism. If we want to see wider adoption, we need to demystify it, make it accessible.
It's like those early days of the internet all over again. People were terrified. Now we can't imagine life without it.
Exactly. Education is key. We need to show people the potential benefits of Bitcoin, answer their questions honestly, and address their concerns. That takes time and effort.
So it's not just about developing the technology, it's about bringing people along for the ride.
Exactly. And we need to be prepared for the unexpected, too. We're talking about a fundamental shift in how our financial system works. There are bound to be unintended consequences, things we can't even anticipate right now.
So it's like we're sailing into uncharted waters, we have a compass and a map, but we need to be ready for anything.
Exactly. We have to stay flexible, be willing to learn and adapt as we go. That's part of what makes this so exciting.
Okay, so we've got the practical challenges, the regulatory uncertainty, the need for education. But the Bitcoin standard goes even deeper, right? It dives into some pretty heavy philosophical stuff.
It does. The book really pushes us to rethink our whole relationship with money.
Okay, how so?
Well, for centuries, we've just accepted that money is something created and controlled by governments. Bitcoin flips that on its head. It says, what if money wasn't a tool of the state, but a tool of the people?
Whoa.
That's a pretty radical idea, right? It forces us to confront some uncomfortable questions. Like, where does the value of money really come from? Is it just because the government says so, or is it something more fundamental?
Okay, now you've got me thinking.
The Bitcoin standard argues that true value comes from things like scarcity, utility, and a proven track record as a store of value.
So gold has value because it's scarce, it has uses, and it's held its value for centuries.
Right. And the book proposes that Bitcoin could be a digital version of gold with even greater scarcity and portability.
So not just replacing the dollar or the euro, but potentially changing our whole understanding of what money is?
Exactly. And that leads to another big question. What is the role of government in all of this?
Yeah, that's a big one. The Bitcoin standard is pretty critical of central banks and government intervention in the economy. Why is that?
Well, the book argues that central banks, by printing money and manipulating interest rates, are actually a major cause of economic instability. They create these boom and bust cycles, they fuel inflation, they erode the value of our savings.
So the argument is that by trying to control the economy, they're making things worse.
That's the gist of it. And it goes even further, suggesting that central banking has enabled governments to wage endless wars and expand their power at the expense of individual liberty.
Wow, so this isn't just about economics, it's about a fundamental shift in power.
Right. Bitcoin represents a challenge to the way things have always been done. It says, what if we had a monetary system that wasn't controlled by a select few?
It's like taking power away from the top and giving it back to the people.
That's the vision. It's about creating a more equitable and transparent financial system where individuals have more control over their own lives.
This is heavy stuff, but I can see why it's so appealing to a lot of people, especially those who feel like the current system isn't working for them.
Absolutely. And the Bitcoin standard takes this even further. It explores how this decentralized model could potentially be applied to other areas of society, not just finance.
Okay, now we're really going down the rabbit hole. Give me an example.
Imagine decentralized social networks, where users have more control over their data, or decentralized marketplaces, where buyers and sellers can connect directly without middlemen taking a cut.
So it's about creating systems that are more transparent, more accountable to the people they serve.
Exactly. It's about empowering individuals and communities to self-organize. It's about creating a world where power is distributed more evenly, not concentrated in the hands of a few.
This is all very futuristic and honestly a little bit mind-blowing. Are we really talking about reinventing society here?
In a way, yes. The Bitcoin standard is a call to imagine a different future. A future where decentralization is the guiding principle, not just in finance, but in all aspects of our lives. It's about creating systems that are more resilient, more equitable, and more aligned with human values.
I have to admit, I'm finding all of this incredibly inspiring, but I also feel like we're just scratching the surface. There's so much more to unpack.
There is. And I think it's time we shifted gears a bit and talked about what this all means on a practical level. For those of you who are ready to explore the world of Bitcoin firsthand, part 3 is for you.
We're going to dive into the nitty-gritty of how to buy Bitcoin, how to store it safely, and how to actually use it in the real world.
Get ready to get your hands dirty.
We'll see you there. All right, we're back for the final part of our deep dive into the Bitcoin standard. And I'm ready to get practical.
Me too. Let's do it.
In parts 1 and 2, we went deep on the history and philosophy of money and explored Bitcoin's potential to, revolutionize the world.
There's a lot to wrap your head around.
It is, but now I'm ready to take action. So for those of us who are ready to jump into the Bitcoin pool, where do we even start?
The first step is actually getting some Bitcoin.
Right, because I can't exactly walk into my bank and say, give me all your Bitcoin.
Not yet, anyway. But it's becoming easier all the time. There are a few main ways to acquire Bitcoin.
Okay, lay 'em on me.
One of the most popular is through cryptocurrency exchanges.
Ah, yes, I've heard of those.
They're basically online platforms where you can buy and sell various cryptocurrencies, including Bitcoin. Some of the big names you might have heard of are Coinbase, Binance, Kraken. Those are some of the most popular.
Okay, so how do those work? I've seen the ads, but to be honest, they always seemed a bit intimidating.
They're actually pretty straightforward, very similar to online banking or buying stocks.
Really?
Yeah. You create an account, verify your identity, which usually involves uploading some ID and maybe a proof of address, and then you can connect your bank account or a credit card to buy Bitcoin. It's pretty user-friendly, even for beginners.
So you're saying even I could figure it out?
Absolutely. Each exchange has its own interface, fees, and specific features, so it's good to do a little research and compare them. But the basic process is very similar across the board.
Okay, so exchanges are one option. What about buying Bitcoin directly from other people? Is that possible?
You can. That's where peer-to-peer platforms come in. Platforms like Local Bitcoins or Pax will connect buyers and sellers directly.
So it's like cutting out the middleman, the exchange, and just dealing one-on-one.
Exactly. And these platforms often offer more privacy, as the transactions may involve less stringent identity verification.
Interesting. But is that, safe? It sounds a little bit like venturing into the Wild West of finance.
It can be, but as long as you take some precautions, it can be a good option. Stick to reputable platforms, read reviews, and don't rush into any transactions. Always double-check the details and be wary of anything that seems too good to be true.
Good advice for life in general. Okay, so we've got exchanges and peer-to-peer platforms. Any other ways to acquire Bitcoin?
The other big one is mining, which is how new Bitcoin is created.
Yeah, that's the one that involves lots of computers and energy, right?
Yep, miners use specialized hardware to solve complex mathematical problems. The first one to solve the problem gets to add the next block of transactions to the blockchain and is rewarded with newly minted Bitcoin.
So you're basically competing with a bunch of other miners to solve these puzzles.
Exactly. And it's become pretty competitive. It used to be something you could do from your home computer, but these days it requires serious hardware, a lot of electricity, and technical know-how. It's not really a beginner-friendly way to get into Bitcoin.
So for most people, starting with an exchange or a peer-to-peer platform is probably the best bet.
Definitely. And as Bitcoin adoption continues to grow, we can expect to see even more convenient ways to acquire it, maybe even at your local bank or ATM someday.
That would be wild. Okay, so let's say I've managed to get my hands on some Bitcoin. Now what? Where do I keep it safe? Under my mattress. In a sock drawer.
Those aren't exactly the most secure options, Har.
Yeah, figured as much.
That's where Bitcoin wallets come in. Think of them as digital vaults designed specifically for storing your Bitcoin.
Makes sense.
There are two main types of wallets, hot wallets and cold wallets. Hot wallets are connected to the internet, which makes them super convenient for everyday transactions.
So kind of like a digital wallet on your phone, but for Bitcoin?
Exactly. But that convenience comes with a trade-off. Because they're connected to the internet, they're also more vulnerable to hacking, so you don't want to keep all your Bitcoin in a hot wallet.
Got it. So where do you keep the rest of it?
That's where cold wallets come in. Cold wallets are offline storage devices, so they're not connected to the internet. This makes them way more secure, but less convenient for day-to-day spending.
Okay, so a hot wallet for spending money, a cold wallet for long-term savings.
You got it. Think of a cold wallet like a safe, where you store your most prized possessions. It's not something you access every day, but it provides maximum security.
So what are some examples of cold wallets?
There are hardware wallets, which are physical devices that look kind of like USB drives. They're specifically designed for storing crypto offline and offer a very high level of security. Then there are paper wallets, which are literally pieces of paper with your Bitcoin private keys printed on them.
Wait, so you can actually store Bitcoin on a piece of paper?
You can. It might seem old school, but as long as you keep that paper safe, your Bitcoin is protected.
But what if you lose the paper?
Yeah,
Or spill coffee on it?
that's the risk. If you lose or damage that paper, your Bitcoin is gone forever. No recovery options.
So definitely not for the clumsy or forgetful types.
Exactly. Choose your wallet wisely, based on your needs and risk tolerance.
Good advice. Okay, so I've got my Bitcoin. I've stored it safely. Now, the million-dollar question. What can I actually do with it?
The possibilities are growing all the time. We're seeing more and more businesses accepting Bitcoin as payment, both online and in physical stores.
Yeah, I've seen the Bitcoin signs popping up at some places.
And it's not just small businesses. Major companies like Microsoft, Expedia, AT&T, they all accept Bitcoin now. Even some charities accept Bitcoin donations.
Wow, so it's really becoming more mainstream. What about using Bitcoin for things like travel or online shopping?
Totally. You could book flights and hotels, buy gift cards, shop online for a wide range of goods and services, all using Bitcoin. There are even Bitcoin debit cards that allow you to spend your Bitcoin anywhere that accepts regular debit cards.
So pretty much anything you can do with traditional money, you can start doing with Bitcoin.
Pretty much. It just might take a little extra effort to find the businesses that accept it, but as adoption grows, that'll become less and less of an issue.
Makes sense. Okay, last question on the practical side. Is all of this legal?
Ah, the legal landscape. The truth is it varies from country to country.
Oh.
Some governments have embraced Bitcoin, others are still trying to figure out how to regulate it, and a few have banned it outright. So it's important to do your research and understand the laws in your jurisdiction.
All right, so any final words of wisdom for those who are ready to embark on their Bitcoin adventure?
Do your research, be cautious, and start small. There's a ton of information out there, but not all of it is accurate. Don't fall for scams or get-rich-quick schemes. Take your time, learn the basics, and remember that this is a marathon, not a sprint.
I love that, a Bitcoin marathon. Well, folks, that brings our deep dive into the Bitcoin standard to a close.
It's been quite a journey.
It really has. We explored the history of money, grappled with complex economic ideas, pondered the meaning of freedom and value, and even learned how to buy, store, and use Bitcoin. If you're still with us, I hope you're feeling as energized and excited about the possibilities as we are.
Absolutely. The Bitcoin standard is a powerful call to action. It challenges us to rethink the way we think about money, power, and the very fabric of our society.
It's about questioning the status quo, exploring new possibilities, and taking control of our financial futures. Who knows what the future holds? But one thing's for sure, the world of money is changing, and Bitcoin is at the forefront of that change.
It's a fascinating time to be alive, that's for sure.
It is. So whether you're a seasoned Bitcoin veteran or just starting to dip your toes into the crypto waters, thanks for joining us on this adventure.
Thanks for having me.
And until next time, keep exploring, keep learning, and keep questioning. The future is ours to create.